We don't have the official details yet. This is just based on reporting by the Wall Street Journal. $17 a share is where they're looking at pricing. How does that compare to the range?
Higher than it. It was $14 to $16. So it looks as though the 10 times.
My apologies. We have confirmed that. It's
Bloomberg,
not, yeah,
exactly. Bloomberg has confirmed. Sarah Fryer all over this for us, but based in California. 14 to 16 times is the marketed range. They're going over and above that. 10 times subscription. We understand actually the orders were concentrated in the $17 to $18 range. It means $3.4 billion. Thank you very much. That's how much they're going to be putting out there. And indeed, their valuation is now close to $24 billion. That's on a diluted basis.
So you're out there in the Bay Area, in Silicon Valley, talking to investors, all these types, drinking the Kool-Aid. How important is it for the people you talk to, not even including the people who are going to all become bazillionaires tomorrow, but just the ecosystem in general, that this seems to be going well?
There's a waft of desperation for this to go well. A lot of fear has baked into the fact that it could dive on the first day of trading. So much hope, therefore, that we will see the price be pushed up, that there's enough excess left on the table for this to trade higher, because who then comes out? Well, we've actually got a small company already looking. MuleSoft has said it's going to be coming out. That's an app integration platform. That's going to be only about $100 million. But then you've got Dropbox. Will they ever come out? $10 billion valuation. Spotify, based in Europe. That's lined up for maybe the third quarter of this year. Many are hope on that particular company. Also, dare we say, Uber, Airbnb.
I knew you were going to
Will
go
they
there.
ever come to the market? Because the worry is valuations have got too high. Too much money is coming from the private market, particularly institutional investors want to get in. They haven't needed to come to the public market.
They haven't needed to come to the public market, except there are some people who do want to cash out. And banks, of course, have a lot riding on this as well, because they earn those rich fees.
Goldman Sachs is the one who's going to really lead on the way. It's one of the lead underwriters of Morgan Stanley on this particular deal. In fact, Goldman is already winning year to date in terms of underwriting across the board. This will win them yet. Maybe 1% to 3% fees is how much we tend to see in technology. It's about 1% fee. As you'll see, overall, we've seen shrinking business in the equity underwriting revenue. In fact, IPOs have been of a smaller size. We know 2016 was actually pretty lackluster in terms of initial public offerings in the tech space. They want to ramp that back up. We will see Goldman Sachs also have the stabilization role. That's a nice role for them to earn. But JP Morgan, Deutsche Bank, Barclays, Credit Suisse, all looking to really start to earn some fees on this. And they're going to want to see the trade pop on the first day and sustain it there.